Hey guys, welcome to the channel. My name is Alex, and today I want to turn you into the Warren Buffett of this era. I want to help you find winning stocks in less than 2 minutes, guys. I'm about to give you a process that is proven, it works, and it's going to put so much money in your pockets by the time you retire, guys. This is for your long-term account, and I'm really going to show you how easy it is to find winning stocks, guys. It's a two-step process, and your 5-year-old son could pull it off, and your dog, if he had fingers, could do this as well. So stick with me, guys. I'm not going to waste your time. This video is going to be less than 5 minutes, but it's going to give you a skill that's going to make you millions in your long-term account. It's going to help you find the best stocks each and every year, each and every month. So before I break down this process that's going to make you a ton of money, don't forget to leave a like on the video if you enjoy it, and we're going to get started. So the process begins with 2 steps. The first step being earnings growth. The second step is going to be the chart. Okay, and so once again, you can look at these debt to equity ratios, these PE ratios, the balance sheets, the financial sheets, okay, but I like to compare this process to your first date with a girl. You're not going to know every single little detail about this girl the first time you meet her. Okay, you can actually start to get to know her better after you've seen her for a couple weeks or maybe a month now, okay? Same thing with this strategy. You're not trying to dive into the financial sheets, balance sheets, debt to equities, all these other things on the first time you're looking at the stock. You just want to focus on these 2 steps that you can pull off in less than 2 minutes. So what are we looking for in earnings growth? Well, first, let me show you how to find the earnings growth in a very easy way. You go to marketbeat.com, check the earnings tab, and they're going to put this really neat graph for you, really depicting what does the earnings growth looks like. So what are we looking for in the earnings growth? Well, we're looking for quarter over quarter growth. We're looking for year over year growth, and we're also looking for forward projections. So what do I mean by quarter over quarter? Well, for example, this quarter, Chegg reported 55 cents a share. Last quarter, they reported 17 cents a share. Simple math, quarter over quarter, we just 3x'd. Now, year over year, this quarter in Q4, we had 55 cents a share. Last quarter of the last year, we had 35 cents a share. So we grew about 45% year over year. That's a great sign. You want a company that's growing, that has future projections, that signal we're going to continue growing, okay? And that's what you have in Chegg. They're expected to continue growing for the years to come. So if they're going to continue growing, their stock price will as well. Okay, earnings growth is a direct correlation to the stock price, 90% of cases. It's the one proven signal and indicator really that you can get to where a company and a stock price is going to go. Okay, so before you dive into these debt to equity ratios and all these things, this should be the first thing you ever check if you're going to look at investing into a company. Now that you've found a stock that has good earnings growth, quarter over quarter, year over year, and they're projected to move higher in the years to come. They're expected to continue growing. Now you want to go to the chart. Does the chart resemble this strong earnings growth? It does. Okay, you have a cup and handle, which is a bullish chart pattern. You have a very strong uptrend, and this is what you want to be looking for in a stock. So now that you've confirmed this bullish earnings here, year over year, quarter over quarter, and going forward, and that chart has, once again, solidified this, what you found here, okay, now you know you have a strong company that's going to continue growing in 90% of cases, but there's always going to be uncontrollables, okay? For example, let's just say you're a CMG investor, which is Chipotle Mexican Grill, and all of a sudden they have contamination problems one day, right? That's not something you could control, but what you could control is finding a good, strong company, and Chipotle is exactly that, right? I mean, look at them now. With all the problems that they've had, they've continued to grow. Okay, and so once again, there's going to be uncontrollables. You're going to have things that drop sometimes. I mean, heck, this is going to be an extreme example, but I don't know who the Chegg CEO is, right? But he could die. Okay, so once again, extreme example. Hopefully that doesn't happen or anything. I'm just saying there's always going to be uncontrollables or black swans in this world that are going to happen, and are going to bring down the prices of your company or stock. Okay, but you can't let these affect you unless it gets too serious, right? So you're going to obviously keep track of your companies, make sure nothing too crazy is going on. But assuming these black swans, these crazy uncontrollables don't come up, you're going to be looking pretty good in about 70 to 80% of the stocks you pick. And this is a proven method that's going to help you find winning stocks. Okay, so let's go ahead and break down this process again, because once again, this takes less than 2 minutes to pull off. All you do, you look for strong earnings growth, you look for a strong chart with a strong uptrend, you buy. Okay, so look, Chegg, it's overpriced, as a lot of people would say right now, right? It's just went on a crazy bullish run. So do you have to buy there at the highest point, the all-time high? You don't have to. You can wait for the dips. You can buy the dips in Chegg. But once again, that's your decision. Where exactly do you want to buy? Where's going to be your entry point going long term? But overall, I'd say you're looking pretty safe here on Chegg, okay? So Now, once again, this process is so easy to repeat, so I'm going to go ahead and walk you through this once again in less than 2 minutes. So let's go ahead and get into another company that could be a prospect for your portfolio, right? Maybe you're interested in Pinterest. Okay, so now what do? You look up Pinterest, you go to the earnings tab, you look quarter over quarter. Is their growth accelerating? Yep, that's a check. Look, 13 cents a share to 43. They basically just 3x their earnings growth in 1 quarter. Huge accelerated growth right here. Now we're going to look at year over year. How are they doing? Q4 to Q4. They've basically almost quadrupled year over year. So they're growing, they're doing well, and you can see their earnings growth projections are sloped upwards. Okay, so they're expected to continue to grow. And look, the beauty and the strategy is that you don't need to be an expert on this company, right? You don't need to know what Pinterest subscriber growth is. You don't need to know their cash flow. You don't need to know all these other things. You just need to know that they're a growing company. Quarter over quarter, they're accelerating. Year over year, they're growing, and their chart is very strong. Remember, this is the second step. You want to take a look at the chart and make sure it solidifies your bias that you've got here through the earnings growth. Now, what do you see here? This is very simple, basic chart reading skills. Okay, this is a basing period between $65 and $75 that we finally gathered and broke above. Okay, so think of this basing period as concrete. It's going to be really hard to smash through and break below concrete. Okay, so a lot of people call this support. But this is not just your ordinary support. This is concrete, guys. And so it's going to be really hard to smash through that. Okay, unless you, once again, the CEO dies, some uncontrollable happens, or the market's correcting hard, right? So this is really safe at these levels at about $70, right? So once again, you know these guys are going to continue higher as long as we don't have a major correction, any uncontrollables, black swans. And so you can be safe and confident in this stock to continue higher. All right, so hopefully walking you through these two examples, finding strong earnings growth, finding the strong chart to match and solidify your bias here is going to prove to you how simple this really is. Once again, that takes less than 2 minutes to pull off. Obviously, I'm explaining it, so it's a little bit longer, but if you just look at these things yourself, you can find this out real quickly, okay? So guys, I know this was some very basic stuff, but remember, we've always got new people being introduced in the market, and some of you guys think you're getting so good that you don't do the basics anymore, but the basics are always going to work. The basics are proven, and it's going to make lots of people a lot of money if they can follow this video, follow this two-step process, check the earnings growth, make sure they got good quarter over quarter accelerated growth, make sure they're doing good year over year, make sure they're projected to go and continue growing in the years to come, and then make sure the chart is strong. If you can do these two things, you're going to be a very successful investor as long as you stay disciplined. So guys, that's the two-step process, earnings growth chart. Write that down. Step 1, earnings growth. Step 2, chart. If you can nail these two things, stay disciplined, the future is really bright. You're going to have some serious security going forward, and you're going to make a lot of money. I promise you that. Don't forget to leave a like on the video if you enjoyed it, and make sure you let me know if this video helped you guys. If this video helps people, I could definitely start to do more beginner style focused videos. And once again, this is a process that's worth thousands, because if you could just repeat this simple process, you're going to make so much money in the future. So I really hope this video can help a lot of people get started in the right direction, and also bring some of you guys that think you're so good back down to remember the basics, to remember what works. And if you got any family members or friends that are new to the market, I think this would be a really good video to help them get started. And you know, once again, it's a super simple process anyone can pull off. So guys, don't forget to leave a like on the video, and make sure you're subscribed for more videos like this. And let me know, do you like videos like this? Okay, because I know most people, you're here because you want to be a day trader. But you know, the first step in being a good day trader is making sure you have financial security and a safety net to fall back on just in case you can't make it happen day trading, okay? Because day trading is a very hard job. You guys all know 80 to 90% of people fail, okay? So how do we help you boost your success rate in trading? Well, we got to make sure you feel safe, okay? Once you feel safe, then you could trade rationally and you can trade to the best of your abilities, and you do that by establishing the safety net, which is your long-term portfolio possibly, right? That's one of many things you can do. So guys, at the end of the day, that's all I've got. Make sure you share with a friend or family member if you think this would help them. My name is Alex. Let me know if you got any questions, and I'll see you on the next video. Bye.